All right, welcome back, everyone. It's time for the 5ers Live Trading Room. We have a lot of people watching. Obviously, you guys want to see this live stream. We got a lot of people watching, and I saw before it went live, a lot of people waiting as well. So without any further ado, the person that you've been waiting for is Victor, right?
Yes,
That's why you're all
yes,
here.
me. Yes, I knew it. I knew it. You guys
How's
were
it going,
waiting for
Victor?
me. How is everyone? Thank you for your attendance.
Yeah.
Everyone who has been waiting, I really appreciate it.
Okay. All right. We got someone in the background here. We got Anastasiia in the background. Without any further ado, let me introduce you to Anastasiia. She's been on a few maybe a month ago or so, 2 months ago, something like that. You guys been asking for her to come on back on for many weeks now. And all right, welcome, Anastasiia. How's it going?
Hey, doing amazing. I'm excited to be back with the 5ers. Thank you so much for having me on the call. Excited to see everyone in the chat as well.
Yeah, we got a lot of people in here, and I saw that you posted in your Telegram channel as well. So maybe we have a few fans of yours in here as well. And by the way, guys, you do have link to Anastasiia's social, got her Telegram channel and Instagram in the description of this video, of this live stream. So make sure that everyone watching who's not on her Instagram, get there and make sure to join the Telegram channel as well. And we are doing a giveaway for today's live stream as well. And the link and the code is in the description of this video. So make sure you go in there and click that link and make sure you're ready for the giveaway. All right, Anastasiia, how's trading been lately? How's the market been treating you?
To be honest with you, September started better off, and summer, July, August is always the worst for me from the whole year round, if I may say so myself. And starting from somewhere September, October, November, December, and January, surprisingly for me, the end of December and January are also good. I know that a lot of people don't trade, so I'm really excited for this period of their autumn and the winter as well. And elections are coming, so interesting things are going to be happening too.
Yeah, I can definitely relate to that. You know, I remember I was on a walk yesterday and I saw, you know, the leaves were falling and you see all the colors coming through on the leaves. And I'm like, I get this feeling of, you know, when a lot of people, they think maybe, you know, winter is a time of darkness, especially in Sweden, it's like 7-8 months of just pure darkness. But for me, it's like, it's kind of like I'm about to lock in. It's time to focus. I know that the market is going to deliver, and so definitely with you with that. Summer can be a roller coaster for sure in the market. What about you, Victor? How's your trading been? Our favorite mass trader.
I don't have a season. To be fair, it goes in ups and downs, but I don't see any particular pattern in certain months or period or seasons to be better than others. I know that I need volatility. So typically when there's less volatility, so that means in summer I have less signals compared to other periods. And weekday, holidays as well, I tend to not have that many signals, but I can't really say that it's worse necessarily. So no, I don't say. I just trade all year long.
You're very consistent. I mean, that's one thing I know with you. You're just very consistent. You know, I try to ask you these questions to see if, like, do you have any weaknesses? And you're like, no, it's consistent every day, the same thing. You know, it's like maybe I get a little bit less signals, but but is there anything? Is there any period of the year, Victor, where you feel like it's just not going well?
Not really, right? What I do have are moments where I have to. It costs me more energy to execute consistently. Other times it flows, but there are some moments either that I'm dealing with something in my personal life, or I have some kind of stressor, of source of stressor in my life outside of trading. Maybe perhaps doesn't matter what it is, and those moments I feel it's like heavier, but it doesn't mean necessarily that my performance is worse. It just requires me to be more on point, focus, etc. But I wouldn't say there's any specific pattern in of course, I have my drawdowns. It doesn't mean that I'm on a straight. My equity curve is in a straight line, but I don't think that's the problem, because all strategies, all traders have drawdown. So having a drawdown is not the issue. It's something normal. So I wouldn't say.
No, that's what I thought as well. You know, that's kind of like what I wanted to hear. You know, we all have periods in our private lives when it might get a little bit more stressful, and that's the things, obviously, you know, a lot of times that creates a problem for me as well. But okay, let's not talk about that anymore. I did see a comment right here. Amal said, "Let's start the analysis," and let's do it. Let's get right to it. Okay, Anastasiia.
It's actually an interesting thing that Victor said, that, you know, and you as well, Jonathan, about the stress. I actually found out that the most profitable periods for me are when I'm on vacation. This is a funny thing. Yeah, really.
Oh wow, that makes no sense. I've never heard that.
It's actually like that. If I see my equity curve, it's always the best when I'm traveling somewhere, when I hold my laptop. But I found it connected to the fact that I'm just executing only the best setups that I have, and I'm not constantly at the distance close to my screen and my laptop on whatever, on my Mac, you know, anything to look at the charts too often.
So do you think? So I think. Do you think that has to do with like you're not, like, you're taking fewer trades, you're not over trading, you're taking a little bit easier? Yeah, that definitely does make sense.
I found for myself in my trading, the things that, you know, is the most difficult for me part in trading is to know when to stop. And when I'm busy with something else, like, for example, on the vacations, like last week, I was in Ireland still, and that was a really great week for me, because I'm not tend to take too many trades, you know, so I'm taking much less trades, but overall they come out to the much better results as well in the end.
Yeah, that's what I've noticed with my trading as well. The less I trade, the more money I make. So if I take, I know that I have a number of perhaps 2 trades a week, and that's the number I should stay around for trading. And if I take 3 or 4, that's okay, but a little bit too much. And I guess I should start trading more when on vacation. But the problem I have is just, you know, I take the kids on vacations. You know, when I'm on vacation and I got the kids, and it's like, that's creates a specific scenario. And for you, if you're listening here, if you got kids, you can probably relate to that. When you go on vacation with kids, it's sort of like, it's not really your vacation, it's more like the kids' vacation. So that creates a level of stress. So I try not to trade on when I'm away, but I definitely understand it. You know, the less trades you take is a lot of times more profitable, basically.
It makes a lot of sense to me too, because when you're on vacation, you're relaxed, right? That's why you go on a vacation. You have less of a stress. You're not on the pressure. You're not pressured as much as when you're not on vacation. And I think that is key, because the stressors, if you are under stress, you typically will not be calm, and you need that calmness to execute your plan consistently. So I think, to me, it makes sense, because it's the same way as when you're in drawdown. Why are you performing worse when you're in drawdown? It's because you are under stress. You know, you're not relaxed. You can't think clearly. So and the same thing. The best trader is the one that doesn't need money, right? That's because you don't have any financial pressure as well. And typically, the more you have, the more comfortable you are in your personal or financial aspect. In this case, the better trader you will be. And it all, to me, it all comes back to being able to be calm while trading.
Yeah, I completely agree with that. Yeah, completely agree.
Couldn't agree more. Okay, guys, let us know in the comments. Do you want to see Anastasiia perhaps break down a couple of trades? Look at some technical analysis. There's a delay of like 15 seconds or so, so it always feels weird asking a question and then waiting for responses. But that's a quick one. Yep, I think that's a yes. Let's bring up the charts. See if we can find anything interesting.
Just 1 second.
Me and Victor, we played around with the layouts yesterday, so it might look super weird now when you bring up the chart, but that's
There we go.
okay. I'm gonna pull it up here. Let's see, got that one. What happens if I click this? Oh no, that's not good.
That's nice.
Ooh, nice.
I think I want that one though. I think I want that one.
Okay.
Right. What are we looking at? GBP USD. Okay, this one.
Yeah. This
GBP
is
USD. Yeah.
sorry.
Now I'm gonna stop interrupting you and then just
Oh, yeah,
go
not
ahead.
interrupted. No, I just thought you were asking something. No, this is GU. Actually, again, this has like the September has been a better month, but nonetheless, right? I have my bad trades, I have my good trades, like everyone. So I'm gonna break down a couple of trades which are both, good and bad ones. I guess it's gonna be, if people like it, I guess it's gonna be useful to see the difference between those two as well. So I'm just gonna, since it's been a while a little bit, I'm gonna remind how I trade. So I always take into account volume. So essentially, majority of my analysis is based on the volume, and in addition to order flow as well. Nonetheless, on the trading queue, I use TPOs and I use volume accumulation zones. So the previous setup here for GU, and if there will be any questions, I'm gonna break it down in depth as well for specific setups that I used here. But in general, for the GBP USD, this was one of the classical setups that I'm taking. So this was the consolidation area, and it was just 2 days ago when the consolidation was occurring. And then yesterday, the price has finally exited. So inside of the consolidation, I never trade. I know some people traded, and there are multiple strategies on how to trade inside of the range and so on. I prefer to rather not. Perhaps the only exception is when it's a range of a daily, for example, time frame. It's a pretty big one. Then surely inside of that range, with certain limitations to their size of the range, I can find my setups. But nonetheless, those are rarely happening trades in my personal trading in general. So this was a typical accumulation. This is a 5-minute time frame. However, when the price exited it, right, we can see that the price dropped here. I was waiting for the confirmation, so I stopped just pretty much placing the orders buy limit or sell limit. I was doing it in the first half a year. Like in the summer, due to the liquidity, I started change. I started to wait for the confirmations for the price to start moving in my direction before I enter the trade as well. So this is one of the changes that I've implemented since during the summer months. So when the price came here, that was their I actually would have handled that as a stop loss if I would be entering here. Nonetheless, I wasn't taking this trade. The more interesting for me was when the price came back above this range. When price coming back above the range, I consider this as a big volume holding the price from the bottom. So but we can use the word support, I guess, here, but I'm not, this is not a typical support, but rather the amount of orders that was trading here, the amount of money that was accumulating in this range was holding the price, and despite the news trying to break it, it still failed. The price came above it. And this was my moment yesterday when I was already prepared to look for the trade. When the price came back to the downside one more time, it did make a deeper pullback into my area, and only when the price started to move back up, I'm going to show on the 3-minute time frame as well. What I was looking for here is this: when the price came back, this small accumulation of the volume and the first candle that exits above it, that was my trigger to enter this bullish trade for GBP USD. So this was one of the yesterdays. Again, accumulation, the exit from the accumulation, the fake out to the downside, the price coming back above this area one more time, which only confirms the strength of the zone that was created. Because usually the fake outs, I like when they are already inside of the range. So let's say the price fakes out inside of the range without exit to the opposite side. That was with the exit to the opposite side, but the fact that it still came above it, was just confirming that, okay, the zone was able to hold the price still. And when the price started to move up, finally, after that small range here, that was my trigger for a buy. So that was a simple 1 to 2 restore word here. And my stop loss for GU specifically is around 15 pips on average. Sometimes it's 20 depending on my entry point. For EU, it is about 10 pips, 15 pips maximum. So I find GU a little bit more volatile, so it's about 5 pips more usually. And my target here, since we've been quite far and GU has been rising for quite a long time already. 1 second. Where is it? There we are. So my target was based on the historical data. So I needed to go back quite far ago to be able to find the range that I'm going to be showing you. But that was my take profit. So if I go back to the left side, and that was already the March of 2022. And I get this question quite often, how long do you consider volumes valid? I consider volume valid for many years if it is on the higher time frame. So if it is a consolidation of the 4 hours, daily, weekly, and so on, I'm going to be considering this valid after quite a long period of time. If we are talking about the volume which was created, let's say 15-minute, 5-minute time frame, I give it 3 days. And if it's 30-minute, 1 hour, I give it a couple of months of time. But I wouldn't be considering valid the volume which was created here if it would be only the small amount of volume accumulation. But this was huge consolidation on 4 hours. And what I did here, I used their, 1 second, I used my VRVP, FRVP volume. And placing over this consolidation, I was finding the point of control of it. In other words, the level where the maximum volume was traded during this consolidation period. And I always place it from what I consider the first candle of the range, which is the first candle that stopped the move. So if the price was moving to the downside, the first candle that stopped the move was this candle here. So I'm going to be placing my fixed range volume profile starting from this candle to the last candle that is still inside of the range, because this was already the breakout candle. So this one was the breakout candle. So my last candle of the consolidation will be this one. So this is going to be the borders of my range that I'm going to be using to identify my point of control. And well, the point of control was right here. It is 830. Level. I marked it down already before I took this setup. And if you go back to the setup from yesterday, the price actually did come to the point of control of the range and reject it. And this is also an example of how the same volume can be valid for 2 years in this case.
That is impressive, very impressive, Anastasiia. Do I see that correctly, that price came to the pip to that level?
Yeah, it did come to the peak to this level. It doesn't always come to the peak, but it is pretty accurate most of the time.
That's what I wanted to ask. How often do you see this happening, where you're able, based on your volume profile and your analysis, that the prices react to the pip, to the pipette actually?
About 30% of the time, I would say.
Wow, that's very high.
It is, but this is why I still have this 15 pips, for example, for GU, because I know that majority of the time, the rest of 70%, by the fact that when it does work out, it does go further than the volume point of control itself.
I see. There is something, if you don't mind, I got a couple of questions, and perhaps people in the audience have these as well. What I see is you have the consolidation that was the reason for you to start looking at this area, right? As it is breaking the consolidation, that's what gets you interested, and in this time it breaks both sides. What made you wait for the second break to get in? Because in this day, it broke the top side and then broke the lower side and came back into the range right? And then you saw your opportunity. What made you not take the first break, or you don't understand what I mean, or maybe the
Yeah,
second
I
one,
understand. I
thinking,
understand what you mean. Yeah. The 5-minute confirmation. So I usually use 5-minute confirmations to enter the trade. If I wait for the confirmation, this is a 5 minutes. So in this case, when the price exited, I want to see in the zone something that is gonna signal me that, all right, the price is reversing and it is starting to go up before I'm gonna take this trade. So for example, in this case, there was absolutely nothing that showed me that the price is ready to go up again. This is why I didn't take the trade to the upside. I did consider, because if you're gonna look at it like this, I did consider, I was on the live as well with a couple of other people at that time. We did consider taking a sell here, but again, with confirmation. So I needed something when the price comes back here on 5 minutes. I needed a setup, like a pattern, sort of specific pattern that I'm gonna say, okay, the price is reversing, it starts to going down. And then I would take the sell here as well. The same would be for a buy. When I was considering taking a buy here, I wanted to see the price starting to go up before I'm gonna take this buy, and it didn't give me any stop here. It didn't break for a second. It's just continued to drop. And the same happened when the price reversed back to the upside. I was considering a sell, but it didn't stop for a second. And it just continued going back up. And what was different with the third touch of the zone is that here we can see that the price actually started to break. So if I'm gonna go back at like 3 minutes, for example, you can see how the price is going to start moving to the upside again. Here. It starts consolidating, and then on this candle, let's exit this consolidation. This was my trigger for entering the trade.
Nice.
So on the
Nice.
5 minutes, just 1 second. On 5 minutes or 3 minutes, I usually wait for either the small consolidation. So similar setup, right? Consolidation, exit, and retest. I double it on the 5 minutes. So I wait for the small consolidation, exit, and retest. Or another setup that I would be looking for is a small head and shoulders pattern, like on the 5 minutes, something like this with a break of the high, with a small higher high. That would also signal me that the price continues to go up. So both here and here would be my small entry point on the 3 or 5 minute time frames.
Great. I like it a lot because it resonates with how I trade as well, where you have a reason, a pattern, a setup, but you wait for the market to tell you that pattern. You wait for that confirmation. Now that confirmation can be anything. It can be different thing to different people, but you're waiting for the market to confirm that your setup is actually something, that you're not, seeing ghost in the market, because you can see patterns all the time, but it has to confirm. But I like that a lot. Another question I have is, I saw in this setup, and I want to know if this is something that is very typical or not in your typical setup. What I mean, the question is, when we see price coming back, right, the third times it breaks the to the upside, and it comes back, and it starts breaking, as you call that. It's and I it's indeed that deceleration. It came, the low of that deceleration or that movement coincides with lows on the left sides, right? Many, if you put it all the way back, the whole structure, right? Exactly. Does that happen very often? Have you noticed that it comes back and touches the same range but the opposite side before it goes the direction, the intended direction? Is that something you see?
Actually, not so often, right? Because my common entry point is a point of control of this consolidation. If the point of control is on the bottom, then sure. But if the point of control is above here, for example, then I often see that the price comes back to the up of the consolidation, then rejects. It also depends on what is happening from the macroeconomics, because we did have news the past 2 days also that we're hitting the pound. This is why we also have this, I found that this is why we were having this volatile moves as well the past 2 days. But in general, not. I find it coming often to the high volume, but depending where this high volume is, on the bottom or on the upside, this is where I'm looking for confirmation, not necessarily on the same bottom here.
I see. So it depends on volume, basically.
Yeah,
The
it
volume
depends
is leading.
Yeah, depends on the
I see.
volume. So if we're going to have a look at this before the price moved up, in this case, it is right here. And this is also why the reason it comes. But if we look at the other consolidations, it doesn't necessarily always, go all the way to the upside. Like, for example, here, the point of control, just a second here. The point of control was here, and this is where the price came as well. It didn't necessarily come all the way to this side, this high, or this high of the range. So it could have, but the point of control was, so this is usually what happens as well.
Very nice, very clearly explained.
So yeah, that was it. Thank you.
Great. So that's you have this setup that you prepared that showed us what the opportunities you saw in the market. Do you have what happened afterwards? Do you have something as a follow-up to this setup?
Well, essentially that was the range, but and the price actually rejected it. But because it was already, just 1 second. It was already the New York here. I usually don't enter the trades in there after the New York as well in the evenings. That wasn't my trading time. So this whole move to the upside, I completely missed because it was just not my trading time. So I exited on the range, which was my initial take profit as well. And I didn't hold it any further, right? So right now, what I'm actually waiting for is for the price to go back to the same zone one more time. Because besides having here the volume from the consolidation, we also have the TPO point of control. If the price would come here again, I would probably take the same setup one more time with confirmation. Or another option that I was still waiting for is if the price would be able to go back above this area. And this area for me personally is, again, this same setup, but already with a new consolidation. So I'm considering this as well as a new consolidation that was formed here. And once again, if I'm going to place my volume profile over this whole move, this is where the point of control of it is currently. So if the price would go above it again, right, I would take another trade because this one went up several times and ended up as a break even for me in the morning because from here it went 12 pips, another 10 pips, and then essentially went back to the downside. So right now, if the price would be able to close back above this consolidation and give me the trigger, it would be a very similar situation to yesterday's one, where the price once again closed above the volume, came back, gave the trigger or the confirmation, however we call it, and then moved up. The same would potentially can happen today if the price breaks the previous highs, at the same time closes above this area here. Let me just mark it up. So let's say this zone, which is 918, and comes back into this gray zone between 918 and 830, I would be looking for another bullish trade. And here is my other setups that I was waiting for, but the price never came back here yet. So it would be something like that. But essentially, it is exactly the same setup as the one from yesterday. So again, if we come close above, it comes back, I'm going to be waiting for confirmation again on 5 minutes. Would also give it about 15 pips, not more than that. And something like that. You need to take it actually.
You mentioned something there, which is interesting. You said if the price would come back, you would still trade it again, the same setup. And that brings the question, how many times can you still take the same setup? And when do you know not to take it the second time around? Any help?
Yeah, of course. It's same setup, but not the same setup. An identical setup I wouldn't take anymore, but there is a difference. Now I'm gonna hide all the markups and everything here. Besides having the setup from consolidation, this is one setup that I take. There is another setup that I take, which is from their developing point of control. Developing point of control is the part of the volume indicator on trading, which is called PVP. It is a volume profile, but it's green, like it's putting it automatically on the certain period of time. So I have 3 of those: daily, weekly, and monthly. And in the settings of PVP, you can find something which is called the developing point of control. This one. It is showing how the liquidity moves. And this is a point of control which moves together with the price. So as long as the price stays above it, this is a confirmation for me that we're going to continue to go to the upside. As long as it shifts and developing point of control appears to be above the price, this is a sign for me that we are shifting back to the downwards movement. And also this developing point of controls are used for me. I'm using them as a sign of the reversal. So, and that's just, I'm going to turn off the normal points of control so we can see the difference. So this blue line here is a developing point of control of the week. So it's a weekly one. It's here played the role of the support for quite a while for the price. If the price would come back to it, one of the setups is to take a trade from the developing point of control itself. This is one. And secondly, the other setups that I use is I use the extension of the developing point of control. So here is a daily point of control. And if it stayed for a long period of time at the same place, like this one, it forms a kind of the stairs which the price climbs. So here, one stair, another one, and then it shifts to the opposite side. But the price keeps climbing it until it shifts the trend. So this developing point of control extension, I also use as a confirmation for entering the trade. So this corner of it is also one of my setups to enter the trade. So I have this one here, and this is the level that I would consider to enter. I have the point of control, developing point of control of the week, which is another confirmation to enter. And I've got the TPO point of control. TPO is calculated slightly differently than the volume profile. And the TPO point of control is this dark gray zone here.
What is TPO? Is that that's another indicator? What is it?
It's a time price opportunity. It's similar to the volume profile, but the point of control of it is in a different place because the mathematic, like a formula behind it, is different. It's also calculating bids and asks inside of the certain range that you choose for the market, right? And the volume is calculated the summary of bids and asks during the certain period of their time that you select. So the TPO they're very close to each other, but slightly different. The point of control of it, so the maximum volume or the maximum bids and asks that are traded are slightly different for both of them in the end. So all my indicators, as you can see, they're just volume. Those 3 are the same for different periods of time. So the first 3 PVPs. Then we got the TPO, which is a little different. VRVP is a volume. It's just a different representation of it. And the normal volume on the bottom that I sometimes use for another setups that I trade. But that's about it. So coming back and simplifying the answer to your question, it is a little different setup. This is why I would take it again. If it would be identically same setup and I wouldn't have any of this here, and I would just have this consolidation, I wouldn't take the same trade twice.
I see. And I recognize that because from the outside trading, when you're an experienced trader and you have tried different things from the outside, someone who doesn't know what you're doing, it might look very, very simple because you're doing the same thing. And it might look like you're taking the same setup, but you have a different reason why you're taking it because you're reading the market on the fly and you have more things to look at, and another thing might give you the signal to take the trade while you're taking the same structure or the same level, but it's not the same. I understand that completely. You mentioned something though. that piqued my interest as well. You said, you mentioned, well, the first one, the break of the consolidation, and then coming back into the point of control, and then moving out with your break or your confirmation. Then you mentioned another one which is based on the weekly volume, right? That indicator PVP. But then you mentioned you trade another setup. The question and then is, how many setups are you trading on a regular day? How many setups are you looking for in the market?
Most of the times they come together. So most of the times it's just different trading setups, but they are like majority of the times they're at the same level. So I very rarely get situations like this when I take 2 times similar setup, because the confirmations come one after another. Usually they come together. But let's count it. I trade the consolidation point of control, so wait the price exiting the consolidation, coming back. I trade this head and shoulders pattern, which is together with the volume confirmation on the right shoulder. I trade the developing point of control. So there are 2 variations of it, the extension and the developing point of control itself. And this is for Forex, right? And I do on the futures, I use a different platform. It's called Cactus. There are several, like there are 2 others. There is a cluster search. It's also, it's like a point volume, which shows you the volume which is accumulated in a specific price level in the specific time. It's like their dot volume that is created. And the last one is their Cactus volume. It's a funny name. I can show you the setup if you want to.
Very funny indeed.
Is it Cactus volume?
I want to see the Cactus volume.
Yeah, I want to see that as well.
The Cactus one is something I use for only for indices and oil. I don't use it for currency pairs. And the reason for it is the currency pairs are too liquid for this. Just a second.
Okay.
So they are just too liquid for having this volume standing out. And indices and oil, they have their sometimes they have their volume spike that stands out of the rest, and you essentially can take the trade from this point, like the volume that stands out. So for example, right, there are a couple of those, so I can break down both of them. So the Cactus volume for me it's a funny name. It's my mentor a long time told me about it, is because if you look at the volume indicator, right, everyone saw it as like a normal volume indicator. If you look at it, volume gradually increase and decreases based on the trading sessions. Obviously, this is S&P 500 futures. So when the trading session starts, it's going to increase. So then United States stock market is going to open, and it's going to automatically, naturally decrease on Asian and London, right? Because the market is closed, there is less volume coming in the market. So it's naturally increasing and decreasing, but sometimes you get the spikes of volume that stand out of the rest. Like, for example, this one here, or this one here. I consider them as a filter that the bar on the volume needs to be 2 times bigger than the bar on the left and right. So it cannot be the gradually increased volume. Because here, this is the market opening hour, 9:30 EST. So this doesn't count as a Cactus because it's just a market opening hour. But the one that stands out, and there is no equal volume on the left or right, this is something that is, for me, piques my interest. So when I find a bar like this, I also want to find the candle that this bar belongs to. In this case, it's going to be this candle here. And when I find this candle, I'm going to, again, take my fixed range volume profile. And I'm going to place my fixed range volume profile only on one candle. On TradingView, it looks a little weird, but I'm going to try to show you. If you look at this here, you will find the point of control of it. Just a second. Let's do it brighter so we can all see it. It's right here. This is a point of control of this candle. This is essentially, in other words, this is exactly the level where the majority of this volume that is showed on the volume bar was traded. Okay, so this is, we're gonna call it a Cactus point of control. Point of control. So what I do next is that I wait until the price goes quite far away from this Cactus point of control. In this case, like in general, my rule is that the price exits above the high or below the low of the candle. So the area that I wanted to exit is the whole area of the candle. In this case, is this whole area here from the high to the low. When the price exits this area, if the price exits to the bottom, I'm going to place a sell limit from the Cactus point of control. If the price exits above it, I'm going to place buy limit from the Cactus point of control. This one doesn't have confirmation because it's just too fast. It's one candle volume. There is no time to wait for confirmations, besides maybe footprint on the futures. This is something I use sometimes, but that's it. So in this case, we can see that the price exited below the low of the bar, of the candle. Mm-hmm. And I'm going to place my sell limit 3 ticks below. So it's going to be 1, 2, 3 right here. A sell limit with their, average stop loss for me is like 20 ticks, for example, for S&P 500 for the Cactus. And here is, well, the 1 to 2 perfectly would work out in this case, but not more than this. So this is a Cactus point of control. And this is another one. Another example, again, we have this Cactus point of control here, Cactus bar here. So again, I'm going to find the candle that it belongs to. I'm going to place my volume profile over this one candle. And I'm going to wait again. I'm going to find the point of control of Cactus again. So Cactus point of control. And I'm going to wait until the price exits the area of this whole candle. Again, if it exits above, I'm going to look for a buy. If it exits below this area, I'm going to look for a sell. And again, it exits to the bottom. So it exits to the bottom. I, again, take 3 ticks below the Cactus point of control, which is, this is 1, 2, 3 right here. And again, we give it 20 ticks like this and 40 ticks. So it's rather a scalp, and it only works for indices and oil. It doesn't work for currencies. I'm going to say it immediately. It's too liquid. This doesn't matter for currencies. One candle volume is nothing there.
Very interesting. And the name, of course, comes from the volume that has a spike, right? Like,
yeah, it looks like a cactus in the desert, right? It's like nothing, and then one cactus. This is just a simple name to memorize.
Anastasiia, I have a question for you. We had a question about the number of pairs. So I think, and before you answer, I think that you're only trading EU and GU. Yes.
I trade 90% of my old trades is EU and oil.
Right, EU and oil. Okay.
Oil, and the rest 10% is S&P 500 and GU, because sometimes between EU and GU looks better. So this is the only reason I trade GU instead of EU sometimes. But that's it. That's essentially everything I trade.
Now, I got a question for you that is concerns about your process, because you have mentioned, if I counted correctly, 5 different setups, right? Or was it maybe one more, one less, but where you, if they present, you would take them. How do you go about during your day to identify them without missing them? Do you have like a checklist? Do you do that every hour? Do you have some, what is your process that, how do you not forget looking for one setup, for example?
I only trade I only have 4 charts opened. That's first. Secondly, I always in the morning, I have my trading times. So it starts about, my analysis starts about from 8 to 10 Central European time in the morning, sometimes 7:30, but that's about 2 hours in the morning, when usually my entry happen. Or if not, and I see that the price comes closer to my entry, I surely can wait for it. But usually majority of them is this 2 hour period of time. And another time when I trade is S&P 500 and oil after 3 o'clock. So because oil market opens at 3 o'clock and stock market opens at 3:30, is the Central European time. So that's another hour and a half when I look at the markets and actively look for setups. So it's pretty simple because I don't need to look for it the whole day round. And it's unlikely, there is a low chance to miss it because I know that majority of my good setups happen in these windows, 2 windows. So.
But how do you, let's say you have that window, 1 hour and a half or 2 hours, right? That you're focused. But how do you have a mental checklist where you say, well, first I look for this setup. If I don't see it, I will go to the next step. Do you have something similar that our viewers might, use as a, do you have like a trick, or do you just see them and you recognize them visually and that's it?
I recognize them visually. I would say it's a visual more training. It's something that, if you look at it every single day, again and again and again and again, you just will realize it. But if we simplify it, it's either the consolidation. So I always first mark up the big volume areas, which is the consolidation usually. The same as, for example, if we look at GU, right? If I would start from 0, for example, if we open a different chart on TradingView, the first thing I do is on the 30-minute time frame, right? And I'm gonna hide all my indicators. On the 30-minute time frame, I'm gonna just visually identify my consolidations. And the consolidation for me is everything that fits in the rectangular box. So I'm gonna identify this one. I'm definitely gonna identify this other one on the bottom, which is unlikely to be present in the time soon, but I'm gonna I'm gonna mark it up because it's pretty close there still. I'm gonna highlight this area here, this consolidation, and perhaps this consolidation on top. So those are immediately 4 zones that I'm looking for. What can help as well is that I always check these zones using volume profile. I take my fixed range volume profile and I place it over the last impulsive move. If the price is moving, right? If it's in the trend, I'm going to place it over the last impulsive move. So I find my recent low and recent high, and it's going to show me where are my biggest volume areas. Again, I'm going to immediately see that this consolidation was interesting because it's a big volume area. I'm going to see that this one wasn't so big. I need to slightly adjust it to these extremes, between those 2 extremes. This is where the majority of the volume is. And this one is something that I would see if I would place it here, like this. So I confirm my zones using the volume profile, and only afterwards I turn on my PVP and stuff like this to actually see their helpful other volume visualization. The only reason I use PVP, for example, and TPO is because they visually represent the same exact thing. We want to find the volume accumulation areas. Majority of them are always on their, majority of them are always on their consolidation zones. And they just visually highlight it. Like, for example, this point of control here, that point of control here. They just visually highlight it, and this is why it's easier to take a trade from it and not miss a setup.
So I think one thing you said that I think is really, really great. You're like, because a lot of people say like, oh, what's consolidation? How do you determine consolidation? And you said consolidation is basically just what fits in a rectangle box. And I think that's...
I get this question so often. You can't...
Yeah, that was so well said. I'm like, okay, that makes sense. Like you take a rectangle box, if price action fits, then it's consolidation, it's range. I think it's important to remember the the power of simplicity in technical analysis, because we can't really make, I mean, I'm sure if you ask me what consolidation is, I could do like a 45-minute presentation on it, or I could just say, yeah, just whatever fits in a rectangular box. And I think it's really that it really, it's supposed to be that simple. I also like, all the volume tools that we have here on the screen is because a lot of people are talking, volume doesn't work in Forex, volume tools doesn't work in Forex, but obviously the levels here are, it fits with price, and that's what we have to remember. If you use these tools in your trading and you see that the levels agree very nicely with price, then I don't see any reason why we shouldn't be using volume tools like that.
Yeah, actually, it's because people, I think, don't know when to trade and when not to trade volume. Because the most important part when trading volume is to not trade inside of the consolidation. And consolidation is a good 70% of the whole moves if we take a bigger range of the screen. One time I actually sit down and I did it on like 6 months of time. 70% of the whole total time the price spends inside of the range. So the most important for Forex is to not just trade 70% of the time, but it's difficult. This is why I think that people say that it doesn't work, because, they try to trade every single move that happens in the market, and
Yeah.
For this is why I said immediately, this one candle volume, it does work for stocks, it does work for stock packages, it does work for oil, but it doesn't work for Forex because it's just not so significant. Because for Forex, what works is a big volume accumulation areas, and the bigger it is, the better it is as well.
I think you said something very, very important. You said that it is important for people to know when not to use this particular thing, and that's a very universal rule. I think you can apply to many things in trading. It's important to know, the strategy, how to identify the setup, but it's just as important, and perhaps sometimes even more important, to know when not to use the setup, when not to enter the trade, even though it has some characteristics that resembles the setup. But there's a reason, there is a distinction that you only get when you have longevity in the industry, like you have seen the setup thousands of times. When to pull the trigger and when not to, and that's very very important, I think, in every setup.
One of the best advices that the first person I was learning trading from gave me, and that was some basic things, the patterns and like triangles, flags, and that is that. But one of the best things he said, I said, hey, how can I recognize this pattern so easily in the market as you do? He said, find me and send me 100 screenshots of each pattern. And I sat down and I found 100 screenshots of flags, 100 screenshots of triangles, 100 screenshots of descending triangles. I don't know how many of those they are. And I find it with every single strategy. If you can find 100 times good examples, this is when our brain visually memorizes the setup that we are looking for. And this is something that I think applies for every single strategy that we use. It doesn't really matter if you trade volume or smart money or whatever, anything that we just need to find more setups that work, more setups that don't, compare, find a similar thing between them to know what to do and what to not do. And when the person sits down in front of the screen for the first time and they've, barely seen the chart, and they jump from one strategy to another, from one tool to another, and add certain indicators to the chart. Often they don't know what exactly they are looking for. They have the trigger here, and EMA says here one thing, and RSI says here another thing, and it all contradicts each other, and they don't know should they trade or shouldn't they trade right now. So I think this is one of the best advices I've ever heard. Just sit down and find 100 times the good example to know what exactly I want to see in my trade.
Yeah,
no, I think you're absolutely. Yeah, I mean, you're absolutely right at that. I think we can, a trader can be profitable with I think the goal is to stick with one thing, because as a trader, we have many different things we can be profitable with. A lot of people say, EMAs doesn't work, trend lines doesn't work, breakout trading doesn't work. And I'm not sure why, you would say something like that, because I would think that, if you, for example, use trend lines and you say, okay, so buy every time price bounces on the third retest of a trend line, I'm pretty sure you'll be able to develop an edge out of that, or just take a whatever EMA and then you look at 100 examples, just like you say, what happens every time, EU hits the, daily 20 EMA. And I'm sure there's going to be an edge in there. So I think it's not about finding, the secret holy grail pattern that works every time. It's more about finding what works for you, and then also understanding, what's behind all of these patterns. So we're all using very different tools, but I think you can be profitable with almost anything in the markets, actually, as long as you're consistent and you're testing it out.
I think so too. I really do think so. And it depends also if the person stays with this one thing or they constantly jump from one thing to another, And it's like in my circle, of trading circle, we used a word paralysis by analysis, when people constantly add new indicators to their charts and they constantly learn something new and new and new, and they watch other YouTube videos and courses and this and that, but they never become profitable just because they keep learning, but they do not apply. They do not go there, and they actually do not start sticking with one thing for a while to see, does it actually work, does it not work, how to make it work, and how to make it better, So
yeah, I think one of the biggest problems is, like you get a new system or you buy a course. Let's say you buy a course and you're super happy about this. Like, finally, I have a trading course. I'm going to go through this course. I'm going to become a consistent, profitable trader. And you trade the system and it works. And you've been trading it for 2 months, and then the losing period of that system starts, and you got 9 losses in a row. And then you start thinking, okay, it's better, I should buy a new course because obviously this system is not working. You start jumping around between these systems. And, I did that in the beginning as well. It took me a long time before I figured out that it's not about the specific system. It's about, staying consistent with what you're actually doing. And, and also, risk management is so important in that sense. It's like you have to know the system, and you have to make sure that you're surviving that inevitable drawdown that any system is going to have.
Absolutely.
But yeah,
It's just that we do look outside a lot of the times and look for the strategies, and not a lot of people actually look within, and they don't ask themselves, what am I doing wrong that the strategy doesn't work for me and work for someone else? Not saying everyone needs to stick with the first thing that they come up when they start trading, but I mean, the most important part of the work, I think it's still inside. And it always is. It still is for me after, many years of trading, because I find that if you want to jump to the next step, you always need to shift something in your mindset. Because if it wouldn't need to be shifted, wouldn't need to change, you would already get what you want to get, you would already have it. And the fact that we don't have it means that there is something a little different that we need to shift, but not necessarily in the trading system, not necessarily from the technical aspect. It's just something that we need sometimes to shift within ourselves and how we approach things.
Yeah, that's very well said.
Very.
So it's, I'm sure Victor has many more questions. I know we've done a full hour here, but Victor, maybe you have one last questions before we get ready for a break and then start the giveaway as well.
Actually, I have many questions. I certainly do, and it's going to be difficult for me to choose one. Instead of a question, what I want to do is invite everyone who's watching. If you like this content, stay tuned, because Anastasiia will be with us again soon, and she will continue to share this kind of powerful. I think powerful. What you just it's kind of hard, I think, to distill and give your perspective of how the process of being a successful trader, what does it entail, where to put your attention, and that's what you're saying, and I think that's very powerful, because things like what you said about, it's not necessarily about the strategy, it's about sticking to one, being consistent about it, and looking within. I think that's so powerful. We are so quick to look for the solution outside, while it begins with us. So I think I think you shared a lot of value today. I don't have any question. I do have, but I don't want to ask them today. So we'll save them for our next time you're with us, Anastasia. I would like to thank you for the all the value you have shared with us today. Some powerful stuff there. I will certainly be looking at them to see how I can benefit from them as well. And I think many people in the audience will do so too. So, yes, I think we are up for our break. Are we?
No, not really.
Oh.
Well, we are. But I wanted to also ask you, Anastasia, where can they find out more about you? So I've been going through the comments here, and a lot of people are asking, like, where can we find out more about you? Where can we follow you? And where can we get more of this analysis?
Well, thank you so much, Victor, for everything that you said as well. I really, really appreciate it. And it's just, if I, it took me a long time to get better in trading. And I think if someone can get it faster, just because they actually can learn what is important, instead of jumping from one thing to another and trying different technical things, I think it's going to be great. So I do have my Telegram channel. It's I think it's in the description of their.
It's in the description. Yeah, we got it all in the description.
Yeah, so this is where I share some of like the different things about macroeconomy, about trading as well, and I did start sharing my trading levels in the beginning of the day as well, just today. So I'm going to be dropping it consistently, and I'm looking forward to be back as well on the live. If 5%ers gonna like it, I would really appreciate it as well, and we're going to discuss more of the things. I do not host any courses, so everything is in the Telegram channel and on this lives here. So I've got this question so many times. It's just
Nice.
these two sources, and everyone can find it right there.
Beautiful. Well, I'd like to thank you. Thank you a lot for coming on here. We know that the audience would love to have you back, and so do we. Do me and Victor. So yeah, we'll keep in touch, and hopefully we'll have a live stream like this one soon again.
Yeah, thank you so much for having me today on the call, and have an amazing trading day as well.
Thank you.
Thank you. Take care.
All right, Victor.
Yes.
Wow, it's only you, me. It's only you, me left.
Indeed.
I need to be standing up for this. I need to be standing up for this.
You need to be standing up.
Up for this.
I want to. Anastasia reminded me of something to tell everyone at home. If you have a cactus, don't forget to water it. It doesn't need a lot, but you still have to give it some.
Or you do what I do. You buy one like this. And you don't have to water it. Man, standing desk is, I love it. I gotta raise my screen as well. Background.
Good stuff.
Yeah, I got some trades coming up. We got Henry. Henry said something about am I going to long NCD CAD? Let's take a look at that one. NCD CAD. Am I going to long NCD CAD? Oh, wow, look at that. That is beautiful. This guy, like, I'm gonna have to offer him a role as my personal market scanner. Like this guy has the best setups out there. You should you should open up your signal service, man.
For sure. I think it's a great service to be able to have someone be your alert system to alert you of any setup coming up. I think it's very valuable if you're able to have someone tell you when to pay attention and invest time in watching at the market instead of you waiting for the setup to come along.
Okay, so why does Henry think that I want to go long here? Well, I think it's obvious. It's obvious. It's a very beautiful break and retest right here. We can look at the using the replay tool right here. We see that price has broken above this level. We have a also daily close above the level. So the daily has broken above. It's break and retest of a daily level with a daily close. And you have the last high pre-break. It's that one right here. So this is what the setup would look like if I put in limit orders. Now I wanted to, because price was in this area when we first looked at this trade, so I wanted to find confirmation. And I think I have that confirmation right now, because if you look at the 1 hour, this in my book is a very, very good a price action structure that I want to see. And now what I want to do is I'll probably want to TP up here so I can limit my stop loss on this one. And perhaps that's going to be my trade right here, making sure that I have my stop loss below the last low pre-break. So stops below the last low pre-break, entry on the last high pre-break. So this is going to be the setup right here. And now I'm just going to hurry to enter the actual trade because I want to make sure that I get in on this move. So I'm opening up MetaTrader 5, making sure I'm on the right account. I don't have time to switch screens. Let's see. Oh man. Okay, so I don't want to market enter here. I really don't want to market enter here. I think market entering here will provide me with a, yeah, I'm not going to like the risk to reward of that trade if I market enter. I can, however, have my entry orders, a limit entry orders right below price, right in this area. And I can even have a lower stop loss TP at those highs right here. And then, yes, I think that's going to be the trade for me. So I'm going to put in a limit order right there. I sometimes when the market, when price is moving, I usually, because I'm trading this on many different accounts with different firms, which means on the 5ers, I'm usually getting pretty good fill. I'm usually getting a very good fill with the 5ers. But on my personal account on Oanda, I can sometimes get quite a bad fill when market entering. So I want to make sure that I'm using limit orders and not market entry. Let's look at the 1 hour. Yeah, I think that's a good level. That's a good stop loss, and it's only just a small move. Okay, so I'm putting in the orders for this one. Quite big lot size on this one. It's much bigger position size than what I usually do. So I need to make sure that I'm not going to lose too much.
Yeah, you got to check your stop loss level.
Yeah, I think stop loss is good though. Stop loss is 45.94. Stop loss 45.94. Yeah, so it's correct. Let's go. Gonna put in orders on that one. I think the reason why the stop loss is so much bigger is because the position size is so much bigger is because the stop loss is actually tighter than usual. But I just put in limit orders on that one right there. Another trade I'm looking at is Euro CHF. So here, okay, I'm not looking at that one. That sucks. That one sucks. Which one am I looking at? Euro AED. This is the one I actually exited this one yesterday. But now, what I'm seeing now is, if we look at this downtrend here on the 4 hour, this is basically what we're looking at. And yesterday I went long based on this trend here. But now, as you can see from that time, it's still a downtrend. But what we have now is a double bottom on the 4 hour. So I'm going to put in orders here because that's the last high pre-break. So let's see. We have that double bottom formation. It's a break and retest of the 1 hour. It's a fairly clean level here on the 15 minutes as well. So I'm going to put in orders on for this trade right here as well. And that is going to be my last trade of the week. Because if this one gets filled, I am now I've taken 4 trades this week, which is my absolute max. My average number of trades in a week is 2, and my absolute max is 4. I have quite a few weeks where I've taken 4 trades, but I also have a few weeks where I've taken 1 trade, which put the average at 2. But I also have to remember my max. So now we have to go in and we gotta look at my entry price. I want that as 92. Stop loss at 27. And TP at 24. You know, when I'm doing this, I'm not reading, reading the comments or anything like that. Like, and you guys probably can relate to that as well. I mean, when you're hyper focused, you're looking at the charts and everything, you're like super focused on what you're doing. And for me, I'm in that state of mind until everything's clear,
Yeah, it's something I can relate to. It's something I do a lot. I'm very good at focusing on one thing, but at the cost, at the risk of disregarding everything else, and which is very good for that one thing that I'm doing, but not very good if you have to keep track of many things at once. So I know exactly what you mean.
Okay, so we have NCD CAD is filled. So NCD CAD is not filled on that one based on this 4-hour candle. That 4-hour candle right there, that is the candle that confirmed the fact that this price is being used as support, and I want to get in on that move. I will, however, put an alert down here, because if price comes below that wick, I am going to look at perhaps exiting the trade before it hits my stop loss. And then Euro 80, I have my orders in for that retest right there. If we look at the daily, this is also a big reason for entering this trade. Now, of course, the daily hasn't closed, and it's 8 hours until that close, and we know that we're not supposed to trust a moving candle. But given the fact that you have a strong reaction at this level, which is a daily and weekly level with a double bottom and a potential break of structure in the 4-hour, tells me that there is a possibility of price breaking out here to test this level right here, which is untested territory.
That's the trade from yesterday, right? That's the same here.
Yeah, that's the trade from yesterday. And I actually exited that one at a loss. But I think it was a good exit, actually.
Okay.
Let's see. Okay, let's take a look at we got a lot of comments.
Yes, tell me about it. I'm trying to go through them, but we have a lot of engagement today, so people love this the live stream, and I know it's because of me.
The giveaway link is working. It's working, and we have a lot of people coming into that link. A lot of people saying that it's crashing. Maybe it's crashing because we have a lot of people going in, but it's working. I'm using it right now. We have 1,700 entries. Doesn't mean that we have 1,700 people, but we do have. Let's see, how many people do we actually have in the giveaway today? Today we have 250 people is qualified to. We're actually over 250 people are qualified to win today. You have the giveaway link and the code in the description of the video, and you also have it on YouTube as a pinned comment. All right, NCD CAD. Right, we got entries for that one, and we got entries for this one right here. So what I need to do now is I need to put in some alerts here, and then I will have to let go of the charts. And this one,
because of your rule.
Yeah, I'm not supposed to do anything with the trades unless there's a price action development, right? Like unless there's something happening with price action that tells me something differently.
Yeah, I know what you mean. It can be a little bit of a risk if you watch too much, and if you're in a moment of quote unquote weakness, you can start seeing things that are not there.
Yeah. Let's take a quick look at gold. We got a short request here on gold. So you guys know when I'm doing, when I'm looking at my levels, when I'm preparing my trades, I'm keeping it very simple, right? And for me right now, gold it's still this level on the daily that I'm looking at, like this general area on the daily. And I don't really want to trade anything other than daily levels. Now you look at gold though, gold tends to break out, and when it really starts its massive moves, it tends to break out and you won't really have a lot of retests. But there are going to be, I know that now's not my time to trade gold. Maybe next month I can find a trade on gold, but probably not this week, or maybe not even next week, because I know that for me to be able to trade gold, price has to come all the way down here. And then down here, it needs to form a good structure, a good, 4-hour bottom formation that might look like this. And that's when I enter the trade. And will gold form that on the 4-hour? Most likely not. Gold is an asset where it hits the level and then it just takes off. So very rarely do I find the trade on gold. When I do find a good trade on gold, though, it has high win rate, but it's only a couple of times every year I find trades on gold. So maybe 4 to 6 times every year I can find a solid setup on gold, because it just doesn't really like to give good confirmation before running. And as you can see here, that level never got retested. This level never got retested. So if you're waiting for a retest of that level, well, you're going to be waiting for probably a year or something like that. Like it's never coming, probably. And you
Yeah.
see, well, here, yeah.
Yeah, it's the same thing with equities as well. It was with every asset that is very trending. It was trending very strongly. They tend to retest or be range bound less often, right? Once they break out and they move, they may come back, but not that often. Like Forex, we're accustomed to having levels being retested many times, multiple times, and they go and make another range, come back to the previous one. That's not always the case, and it's logical, because if you have an asset that is trending very strongly, by the definition of that already, it means that it's going in one direction and not coming back to where it started.
Yeah.
So that's the nature of the asset, how it interacts with your strategy.
Yeah,
I have the
definitely. I
same
mean,
thing. I
yeah,
have the
I mean,
same
you have
thing
to
because
adjust.
go ahead.
I mean, you have to adjust your choice of market to the strategy that you're trading, and then of course you have to test your strategy on said market. And I haven't tested my strategy on gold. What I do when I test is I usually test a basket of pairs, and I test every pair that I have, because that would take me 6 months. Yeah, it's so gold, actually I should test it on gold, because I should test it on gold, or not. I don't care.
Well,
I
I think you should,
Yeah,
and you let a data
maybe.
tell you if you're going to trade it or not.
Yeah, maybe that's a good idea, because the
Yeah,
statistics on gold is not perfect.
yeah, and probably because of the nature, the different behavior of this particular asset, you probably have to tweak your strategy or adapt it, optimize it for that kind of movement, right? Not waiting perhaps for a deeper retracement, maybe be less selective with the depth of the retracement, for example. I don't know if that's makes sense to you, but in my case, that's something that I would do. Like in Forex, if you have a ranging market, or a pair that is not so trending, it has a better chance of going and testing the extremes of the range. But if you have a very trending, as I said, it's not going to go that deep. So that's something that that already I know from that needs to be adjusted if you're going to be trading a different kind of pair or a different kind of asset.
I have actually a pretty good example of a trade here on ADNCD. I looked at ADNCD this morning, and you can see how this is actually a good example of. We talked about market structure shifts, and I'm gonna show you this. I think this is pretty good. So what you have here is a downtrend, and then you start to see a shift on this higher low. So this is a higher low, and then you break this high to create a higher high. And what happens here is just beautiful, right? Put a horizontal level on here. You see they retest this area perfectly. Breakout, retest, and then you form this uptrend. But what happens here is you consolidate, break down, and then retest that breakdown area again. So if I would be trading based on the 1 hour, which is actually an idea that I've started testing and I've started looking at, because sometimes waiting for that 4 hour bearish engulfing, I've seen that a lot of times it gives a very good confirmation on the 1 hour. You see right here, you have that break lower. And what do I look for? I look for the low prior to the break. Just that one right there. And price comes up, hits that level, a 1 hour bearish engulfing candle. I want to have the stops above the high prior to the break, which is that one right there. And then again, I'm just taking 0.53 or profit, which would be right here. So might have been filled on that one, but it's, yeah, a lot of times I'm very interested in looking at how would my confirmation look on the 1 hour, and that's something I've started looking into a bit. But I think I am going to stick with the 4 hour because I like the idea of taking decisions every 4th hour. It just works very well with my daily routine, and I trade every hour a day. So having to look at the 1 hour candle close like once every hour is
it's very tedious.
Yeah, I think it's if I had a specific trading session, then that would kind of make sense. But now I'm trading, the first 4 hour candle close that I look at is 7 in the morning, and the last one is 7 in the evening. So I basically trade, 12 hours from 7 in the morning to 7 in the evening. And within those 12 hours, I can take, is it four decision, 8, 9, no, 3, 7, 11, 3, 7. Okay, so 4 decisions within those 12 hours.
But you start before 7 then.
Yeah, exactly. Start,
okay.
possible trade at 7, and yeah.
So the first one is already an opportunity, a potential opportunity at 7. That's quite early. But but as you're trading 4 hourly, I think it's well, going to the 1 hour gives you more opportunity, more trading frequency, which is good as long as it's not a problem for over trading and your your emotions. But 4 hour is comfortable. I think it's comfortable because you have the time to think things through, and usually that's a very great thing to have.
I like this comment. It's like, you want to start trading? Yeah, go from 9 to 5 to 7 to 7. And that's actually that's kind of like what it is. If you're going to start trading, I mean, you really have to like this, because you can get alerts every hour of the day. You can have alerts of orders being hit, stop loss being hit, alerts in trading view of level being hit. You have to be available. Like the market is ever changing. It's like a flowing river, and you have to be able to get into that flow. And it can be frustrating at times, you know. But then if you're day trading, if you're scalping, you have a specific trading session, then it's different. But I would say that most of the profitable professional traders I talk to are trading, you know, taking less decisions and looking at more of the higher time frames, I think.
I think less decision is good for your consistency, because
Yeah.
slower is typically better. Even though you think more opportunity is better, there's a lot more risk for you to mess things up. And if you only have like 4 moments during the day that you need to be taking decisions, it is there's less chance that, you know, by the time you have to make a decision, you are tired, or you don't have any mental equity left, right? If you're doing that all day for 12 hours, and every hour you need to be sharp, it's likely you're going to have one of those days every so often where you're not in good shape and you're still taking decisions. Guess what will happen? You will not be executing trades that will have the same edge as you think they have. I there is a trade that I want to share on EU that I took, and I
Yeah,
or
please do.
are you in the mid? Okay, all right.
No,
So
go ahead.
this is okay, all right. So this is a trade that I took, and it is something I want to show it, not because it went to TP, but because this is the nuances that comes with having a lot of data and or a lot of time in the market. Because the setup, right, normally the setup, if you don't have the data, then the strategy would have told me to hold this trade all the way much lower, right? Because I want to catch the biggest move of that of the day. But if you look at price action, this is EU, by the way. If you look at price action, it's been very bullish. The trade was not where we have this indicator here, but it was actually in this candle, right, in this line, before it came up, right, and broke the structure afterwards. But the thing is, if you look to the left, you can see that the market has been very impulsive. How likely is it that it's going to bounce from this place and without any structure, you know, breakdown structure on the higher time frames, on the 1 hour, on the 2 hour, on the 4 hour? The break of structure, the lines to me, the necklines on the 1 hour was below here. So it did not break anything. It did come to a area of interest to me because of the H4 to the left, but it needs to the the market has a rhythm, right? It doesn't go from going up to going down on the 4 hour just like that, as in a V-shaped correction. It does it sometimes, but that's not the most likely scenario. Typically, if it's going to have this kind of move that big, you will see some kind of reversal pattern popping out when it gets to this area, and that didn't happen, right? And that was the reason that I didn't want to hold this through, because if you don't consider that and you just use the mechanical part of the system, you will have your I would have my TP down here because of the rules that I have. But I knew that, and this is the discretionary part that is that I haven't put into the mechanical system yet. I knew by looking at price action earlier that that is not the highest probability trade. And if you go to the lower time frames, you can see the areas that made me get into the trade, right? That this was the when price triggered me at these coming back. Actually, it was like this, right? I had these structures coming in, and the first one was a structure that this one, which is not very visible right now, but that was the reason that I got into the area, into the trade. And let me get the thing.
Could you do me a favor? I think. Sorry to interrupt you here, but I think a good thing that we might do here is maybe you can play this through with the replay tool, like to show, bar by bar, when, like, what price movement, when did you decide to enter and put in limit orders or whatever? Would that work?
I don't have that function. I don't use that
You
function, and I don't have it.
Okay.
So the what I can do with this vertical line is I can indicate when I saw and spotted this setup. Maybe I should put the take that function for illustration purposes. Personally, I don't use it, but yes, maybe it's a great idea. But if I yes, this is the place where I got interested, and it was based on this. Let me get it out of the way. It was based on this order block right there, right? There were multiples, but that was the one that got my attention. That was one of them. And as price was coming back into them the first time around, it moved away. But then came the second time, and on a lower time frame, I got my entries. It was actually on the 3-minute that gave me the entry when it came here, and that was the signal that I needed to get into the trade. Well, the exact signal doesn't really matter, but that's just one rule that I use for to identify how price is reacting to the point or the areas of interest. However, what I what I think is important to point out is that normally I would have taken this for much more than just a TP based on this order block. This little thing here normally is not what I typically go for. I want to be going, because if I think the market is moving from an H4 order block, it's probably going to be needing something much more bigger than this small little order block here, which is not even that significant. But when I saw to the left everything here, I couldn't find anything all the way going down to these levels, right? You could say there is an order block here, but at least on the H, on the higher time frame, there isn't. So to me, it was very unlikely that this is all the reversal is going to show us and then goes straight away down, right? Because that's basically what it wouldn't have needed to do. If I were to think that the reversal will come, it will still have to form, then obviously it's going to take me out, right? So if I take this trade and I put the TP all the way lower, I'm already assuming that whatever that I saw here is all the reversal is going to show us. And with time, I learned that that's not how the market typically shows itself. It normally it gives, it has a rhythm. So if it's moving, if you're looking on the higher time frame, it is not that likely that it's going to reverse from all these bars just like that. It's probably going to show you, a structure, something with some flesh before changing direction. So that is what I did, and I didn't have anything. So the FTA in this case was this little order block, and that's what I target. And even though it's not as sexy as a very high risk reward, right? It wasn't more than 3.6, I think it was. Let me see what the entry was exactly. The entry was around here, and my stop was around there. So yes, that would be not 3.6, but even lower. But in my mind, about 3. Actually, it is. Let me double check this. The TP was here, right? So it was a little bit over 3, but still, it's not. That's like the bare minimum for me. But still, I think that's the key, the take home thing here is to identify or have the have the feeling for the rhythm of the market. When am I able to push this? When am I able to what's the relevant FTA? And the relevant FTA was this, because the other one, there wasn't anything inside all the way much lower, which wasn't very probable for price to be changing direction so drastically without showing us some kind of reversal pattern. I just wanted to show that. And if I would have held, it would have come back and take me out, which is to be expected if you have this kind of impulsive moves all the way like this, right? It wasn't like that. We only had this, basically. That's what I wanted to. Nice. I like the layout. You're muted. You're muted.
Yeah, every single time. Yeah, man, I'm playing around with it. I think it looks a bit weird here with the round cameras. Playing around with a little bit here with it, but I want to have the screen both at different corners, like yeah, that would be cool. Why not? Is this guy telling me that I'm muted or that I should be muted? Yeah,
I think that you
whatever.
were muted.
Let's we'll try it out. I think I don't know, man. I think this looks weird. Giveaway results. Someone is interested in the giveaway. What do you think, guys? In the comments, are you perhaps ready to take a look at the giveaways? Maybe we should do that. Maybe we should do that today. What do you think, Victor? Are you ready?
Sure. Yes, I am. I'm certainly am.
Right.
And I think people in the audience. No, I don't think they're ready. I don't think they want giveaway.
I don't know.
I don't know. No, I think we should postpone it for next week.
Yeah. Okay, so I'm gonna put on a slow mode in the chat. Yeah. We are ready. Okay, so the slow mode is on. Now you gotta make a decision on how to run the how many likes do we have? Okay, we got 360, so that's gonna be, are we gonna do two accounts today? 2 accounts. And guys, we got something really cool going on here with, I don't know if you guys are familiar with our Discord server. If you're not, then you have to get into the Discord server. Everyone who has a evaluation account or funded can go into their hub, into the program, and then you can join our Discord server. It's free for everyone that has an account. And in there, we're doing this amazing trading challenge where we have different teams within Discord, and we're giving them an account, and they then have to trade that account as a team. And we're going to integrate this into YouTube, so you're going to be seeing a lot of the content from that challenge in these YouTube live streams. So that's definitely something that I'm really looking forward to. And also, we're also working on setting up the finalizing the final details of the merchandise store, which means that in the future we're going to be able to give away specific unique trading room merchandise. And it's going to be in a very limited supply. So maybe only, one specific hoodie might only be printed in, I don't know, like 10 pairs, which means that, like, I'm not even going to have it. Victor's not going to have it. Like, the only ones that are going to have it is you who win the giveaway. It's going to be like a VIP trading room hoodie, which means that only about 10 people in the world are going to be able to get this official The5ers hoodie. So that's something that I'm working on, and something that I want to do with you guys here in the trading room. And also, what do you guys think about? The The5ers have 3 different evaluation accounts. What if we create a 4th one only for you guys? Think about it. Yeah, think about that. A specific evaluation account only for you guys who are watching the trading room. And maybe it's even going to be free. And maybe if you win that, you'll be awarded with a free evaluation, something like that, where the evaluation is free and the price is something, So instead of winning an account, you have the opportunity to trade through an evaluation to get a free evaluation without having to pay for it. So I think that would be pretty cool. So I'm in the planning stages of that. I'm trying to think of how can we create a truly unique evaluation that's not out on the markets, like a specific trading room evaluation where you have to know how to trade, but it's not going to be too difficult. But there's going to be something unique in it where maybe you have a max lot size, right? You can only have like a max lot size or a minimum lot size. That could be fun as well. Something that's truly unique, something that you have to be consistent. You have to really be able to trade in a certain way to be able to go through this evaluation. Yeah, so that's something that we're working on, and something that we're going to be able to provide you with, guys, here if you continue to watch these live streams, because this is probably not something I'm going to be going marketing outside the live streams. I want to make sure that this is happening within the community.
Sounds
Okay, so
very exciting
today,
to me. You said exclusive hoodies, more exclusive than even limited edition items. If you only say 10 or something in that range, that's even more exclusive than limited edition, like shoes or sneakers and things like that.
Yeah, that's going to be
Nice.
pretty cool. Yep. Okay, so today we're going to give away 2 20K bootcamp accounts. Okay, and the way this works is I'll draw the winners. So we're going to be two 20K bootcamp accounts. I'm going to be drawing the winners shortly, and I will then put the names of the winners up on TradingView right here. And what you have to do is you have to confirm that you're the winner by not disclosing your whole you're not getting this is one of a kind. Actually, it is. There's only one of these in existence, and that's mine. Yeah, talk about limited supply. It's my very own. No one's getting that one.
You've cornered the market. You're in control of supply.
Well, you can't buy it though. Like if you enough money, then I might be able to send it to you. But that's going to be straight. I only take Bitcoin and only whole numbers. So yeah. Okay. Let's see winners. Let's draw winners. Here we go. 2 people. Let's go. Today we got 300 people. 300 people. 2 out of those 300 is going to win the bootcamp account. Okay. Here we go.
Good luck, everyone.
I think both of these are actually in here.
Are they?
Let's see. It's see. I think so. I'll just blur out the name.
Not gonna happen, people. Not gonna happen.
What's not gonna happen?
People are asking for your hoodies as the prize for the giveaway.
Yeah, so 5 Bitcoin. 5 Bitcoin is yours. Okay. Here we go. These are the 2 winners of today's giveaway. So please, could you please confirm your email in the comment? I'm going to give you 2 minutes. So I want the first. So for the first winner there, I want the first 3 letters of your email, and then for the second one, I want you to just confirm whatever way you want. Your email is not exactly what your name is, so if you can tell me what the difference there, and confirm, and then let me know. Okay.
The timer is running. We have some delay, so we're going to wait some extra for them to respond, or we give them ample time to react.
Yeah. I think they're not here.
Would they? Do you have the delay feature activated?
Yeah. Okay, we got the first winner. Congrats. That's the first winner right there. Congrats to you. I will forward your email to the right people right away, and you can expect to get an email. You're gonna get an email from me in a day or two. Okay, Sila is here. Yep, the first one is a winner. The second one I am not seeing here, so I'm going to select a new one for that one. We give it 20 seconds. I got my timer on for 2 minutes.
Congratulations on Zila Ogili. Hopefully that's how you pronounce it, but in any case, congratulations. You have one account your way soon.
All right, new winner. Okay. Get a new one here.
That's the second winner right there. AV.
Yep, that's right. AV Vats 11. If you are the winner, please confirm with your email, and it should be quite simple. I only need the first 3 letters of your email to confirm that it's you. And we got the timer running for 2 minutes. There's also a 1 minute delay on the chat. That's me. Yeah, it looks like that's potentially you. Now, what I need you to do, if this is you, I need you to give me the first 3 letters of your email that you used to sign up to Gleam. The reason why we do this is because we might have people trying to game the system, and sometimes people don't remember what email they signed up to. So you need to confirm with the first. I'm pretty sure this is the guy, though. I'm pretty sure that it's him, and I've seen him around as well. But yeah,
looks like it. But
3 letters.
We still have to wait for that confirmation. So
Yeah.
we ask this user to confirm your identity by disclosing those 3 letters, the first 3 letters of your email. Only you know that, so that's going to prove you are the winner. There it is.
That's not it. No, that's not it.
Ooh.
That's actually not it.
I see. So that person forgot the email, or isn't the right person?
No, you gotta give me first 3 letters. The thing is, he gave me the last 3 letters. If I'm gonna give him a couple of minutes extra. The first 3 letters. The first 3 letters. I mean, we need to wait. We need to wait. I mean, this might not be the same person, but he gave me the 3 last letters. Yes. Okay. There we go. That's the one. Damn, that was close. Imagine if I'm like, okay, next one. Okay, congrats, guys. That's it. That's it for all the live streams for this week as well. Your emails, both winners today, your emails have been added to. I've sent them over to the team. They will create specific links, and I will send you an email. So the way we did it before was we will credit your accounts with credits, your hub credits. But what I'm going to do now is instead I will send out emails to the email you use to sign up to Gleam, and I will do so as soon as the team has created specific coupon links for you to use. Okay, that's it, guys. Thank you, everyone, for joining us here today. It's been a pleasure, hosting this live trading show this week. It's been a pleasure to host it with. It is the last one, right? It's Wednesday.
It is.
Yeah.
It is. Sadly, unfortunately, it's the last stream of this week. Yes, it is. On YouTube,
Yeah,
it is.
Yeah, it is. It is kind of risky if you use our no name. Yeah, but it is what it is. It is what it is. We'll figure something out next time. No, I'm sorry, but I can't send you an email. That's not how it works. You have to first actually win. Yeah. Okay, guys. Thank you all for joining today. And by the way, if you do have any feedback, any comments, any questions, whatever, I want you guys to send an email to tradingroom@the5ers.com. And you know what? I'm actually thinking about something. If you send me a suggestion or feedback on the show, something that an idea that I think is very valuable, right? Very valuable, and something that we can implement into this trading show. Then maybe there's a giveaway for you, right? Maybe there's a way for me to give you a higher chance of winning the giveaway. Now, I'm not telling you that you're just going to start spamming that email with random suggestions. It has to be good stuff that, when implemented into the trading room, is something that is worth exploring. Okay. With that, thank you all for joining this week. Victor, anything you want to talk about before we leave here?
Actually, I want to invite everyone who is not part of our Discord community yet to join and see for yourself what is the hottest community in the trading industry all about. That's the community of the 5ers on Discord. We have every weekday we have workshops, live stream, focusing on you as a trader. Where can you get that? Tell me, where can you get all of that value just by being part of our group, our tribe, our family? So if you're not a member yet, join and see for yourself. That's it for me. We had a great week. Sadly, it has come to an end. I invite everyone to join us next week again, when we will be having, we will continue with our live stream on this platform. So that's it for me. Thank you all, and stay safe. Bye-bye.
That's it. Take care, guys. See you guys next week. Bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we